All right, good afternoon, everybody. Uneducated Economist here, doing the live stream from the Suburban today. Finally got the Suburban all registered, insured, and legal for the road. So we're going to be doing the live stream today from the big old from the big old Suburban here. Going to talk some more about the Federal Reserves and their monetary policy. This is something that I've covered so much on this channel. Like, I've constantly been covering the idea of the Fed's monetary policy and what it is that is taking place within the economy today, and have been going on for quite some time, is that the Federal Reserve had let interest rates kept interest rates extra low, extra long for an extended period of time to try and create an inflationary scenario to make up for the fact that they failed to achieve the 2% target over the previous 10 years. Now, this is something that they had talked about. This is something that I have constantly reiterated on this channel, and that after the inflationary scenario took place, they were going to keep interest rates elevated, extra high, extra long for an extended period of time. Now, we can give it all the reasons and excuse and talk about the political atmosphere and talk about all the stuff, but if I called this out literally 2 years ago, saying that once the interest rates were elevated, they would remain elevated for an extended period of time, that's what's happening. Now, again, we can give it all the reasons and excuse and give it different meaning onto what's created the situation. The point being is that they wanted this situation to take place, and it's occurring. They wanted a situation to be happening within the economy to create an elevated inflation expectation so that it would raise the neutral interest rate. I keep saying it over and over again. I know nobody else is talking about it. I understand that everybody else has their own opinion on why it is that we are facing the conditions that we are facing today. But if you could go back 2 years ago and even 20 years ago and start describing what the monetary policy was going to look like in the future, based on some of the ideas that even Ben Bernanke was talking about back before he was even chairman of the Federal Reserve, when we see the situations now occurring here, to think that they are flying on the seat of their pants or making snap decisions or do not have a deeper hidden agenda and strategy taking place right now is very illogical. That's exactly what they are doing. They want to have the elevated inflation expectation. They have papers, working documents, all kinds of information out there that talks about how it is that they would create an inflation expectation to be elevated within the economy, knowing that not everybody would get the information. They would have to create the information communication to those individuals who normally wouldn't have received it. This is something that the Federal Reserve had done in order to create an elevated inflation expectation. This is how the Federal Reserve is now conducting their monetary policy. All these people who are looking at Trump's tariffs and saying, oh man, look how this is going to destroy all these economic conditions. Look at the article that I leave down in the description. This is quoting Neil Kashkari, who is a voting member of the FOMC. In that interview, in that article, he uses the words uncertainty about the current situation, and that we could find consumer confidence snapping back if all of a sudden that problem was alleviated. Now, I just kind of thought about that for just a second. I'm like, okay, wait a minute, Neil. This is Neil Kashkari. I'm thinking, okay, so you are under the assumption that so long as we have this crazy uncertainty with the tariffs and all the other ideas, we're going to have this elevated inflation expectation that ultimately destroys the consumer confidence. But if somehow the information came out that the uncertainty that we are facing right now becomes very certain, and it's not as bad, or alleviated the uncertainty, we could find consumers snapping back. So I thought about that for a second. I'm like, wow, this sounds very reminiscent of when the Federal Reserve was saying, once everybody is vaccinated, the economy can open back up again. You know? And so I thought about that for just a second. These two statements are very similar to each other. Like, the bankers don't know that a vaccination would open up the economy. They just said once everybody is vaccinated, the economy can open back up. And I thought to myself, it was like, you're not a doctor. You have no idea about that. That doesn't make any sense unless you are talking about a timing issue. By the time everybody is vaccinated, the economy can open back up. Remove the mask, remove the social distancing, remove all these restrictions upon the economy that kept the consumer confidence depressed. You take that away, all of a sudden you got consumer confidence snapping back. Well, he just said something about consumer confidence snapping back due to the fact that the uncertainty that we are facing becomes certain. And whether or not it's as bad as what people are assuming is taking place now. You see the difference inside of this? Like, how could he possibly give a prediction that the consumer confidence would snap back if it wasn't for the idea that he has this expectation that that moment would come? You see where I'm getting at? Like the same kind of statement saying once everybody's vaccinated. Well, another way of saying that is once we have got to the point within the economy that we can remove this mask and the social distancing and all that other stuff, we can have consumer confidence snapping back. Well, very much like we can have consumer confidence snapping back if we don't constantly hit them with a credible tariff or a credible threat of tariffs. Once it's become certain and people understand what it is that's taking place, then even Neil Kashkari is saying, hey, all this misunderstanding or all this uncertainty and all this depressing of the consumer will no longer be there anymore, and the consumer will come snapping back. Okay? You see how they're like, to understand what it is that they want out of the economy is different from them being forced into what it is that they are doing. See, a lot of people think that they are forced into this situation when they are actually enjoying this process. They are liking it. This is working for them. And a lot of people don't understand how that could possibly be. They think, oh, the Fed is frustrated because they can't get the 2% target. Wrong. Absolutely incorrect. Nothing could be further from the truth on that. The Federal Reserve is going for a monetary policy with an inflation that is moderately above 2% for some time. This is their own words from the consensus statement. Even Jerome Powell, in his last meeting, in talking about the current FOMC statement, he even admitted it in that press briefing after the speech. They asked him about it. He said that portion of the consensus statement will not come up for review. That moderately above 2% for some time is not part of the current review of the consensus statement, meaning that's going to remain. We are going to find out more about that at the end, I don't know, probably towards the end of summer when that thing comes out again, because they have a new consensus statement that's going to come out. In that consensus statement, we are going to look for those words. If those words are there, I'm going to know that I am 100% accurate on monetary policy and everybody else got it wrong. I'm putting myself way out on a limb by saying that, but I'm sure of it. I am sure that it is there. And I'm sure that's exactly what it is that the Federal Reserve is shooting for right now, is moderately above 2% for some time. They are achieving that goal. They needed the elevated inflation expectation in order to maintain elevated Fed funds rate, in order to get the neutral interest rate to the Fed funds rate instead of the Fed funds rate finding neutral. There is a created economic environment right now, self-inflicted, tariffs, threats, all the stuff that comes from it, that begins to raise that neutral interest rate, and it's totally working for the Federal Reserve. The Federal Reserve can sit on their hands, do nothing. The neutral interest rate, which is the rate that's neither accommodating nor restricting the economy, can then elevate on the inflation expectations, making the restriction on the economy less as the neutral rate starts to move closer to the Fed funds rate. I've been saying this over and over and over again, and here it is taking place. Nobody else wants to talk about it. Nobody else wants to see it this way. The only people who seem to see it this way is the Federal Reserve and the FOMC and their monetary policy communications to the other central bankers and the uneducated economist. That's it. There's the only two places you can find this information. And I don't know why everybody else seems to have it stuck in their head that they are going for this 2% target outside of the fact that it's constantly pushed out there in the mainstream media that that's what the Federal Reserve is doing. That right there is part of the communication style in order to conduct monetary policy. They literally allow people to misunderstand the monetary policy so that they could go for that 2% long run average inflation. It's not a matter of trying to get to a 2% target. It's a matter of creating an environment that makes up for the fact that they have deviated away from the 2% target. See, in 2012, the Federal Reserve set up this 2% inflation target. And that if they were able to maintain a 2% target, they would achieve their goal. If they got above 2%, they would adjust monetary policy to achieve 2%. If they got below 2% inflation, again, they would adjust monetary policy to bring it up to 2% and try and maintain 2%, leaving the bygones be bygones. Like if they screwed it up and couldn't get there, forget about it. Just try to maintain 2%. That is what everybody seems to think that the Federal Reserve is trying to do. That is not right. That is absolutely incorrect. They are making up for the fact that they failed to achieve that 2% target since 2012. Never once since the time that they had implemented a 2% target were they able to achieve a 2% target. Not once. Why it is that people seem to think that they would be going for a 2% target now is beyond me. They have never once been able to do it. Not once. So if you go back through history and say, well, they're going to try and achieve something of this, there is nothing to look at because no time in history were they able to achieve that 2% target and maintain it. Not once, not even when they tried. So now they are not trying for a 2% target. They are trying for a flexible average inflation targeting, which means that they will be making up for the fact that they failed to achieve the 2% hit, the 2% target. Now they go for 2% long run and average inflation, which means that during times of missing the 2% target, there will be times where they'll be above 2% to make up for the fact of it, so that the long run average ends up at 2%. You think about it, if you were shooting at a target, right, and you had a rifle, and the target said 2%, and you sat there and you shot at 2%, and you hit the 1%, and you shot again and you hit the 3%, and you shot again and you hit 1%, and you hit 3%, and you hit 1%, and you hit 3%, what's your average? 2%. Right in line with what it is that the Federal Reserve is looking to do. That's how they're achieving their 2%. It's not, never once have they ever been at 2%, nor will they be able to do that going into the future. But they can be under 2% for a while, and they can be over 2% for a while, and under 2% for a while, and over 2% for a while, and still achieve their goal of 2%. See, this is how the Federal Reserve is operating right now. And it's not me making this up. This is coming from their own words. Go and type into your Google search, if you don't believe me, Federal Reserve make up strategy. That's it. That's all you have to put in there. Federal Reserve make up strategy. There is all kinds of information talking just about that. Type in Federal Reserve flexible average inflation targeting. FAIT. F-A-I-T. Not fiat. FAIT. FAIT, flexible average inflation targeting. You will find it. You will see it right there. Within their own words, they are trying to make up for the fact that they failed to achieve a 2% target. And even this thinking about how Kashkari right now is saying that it should be extended for a period of time. Wow. Who else was saying that for a long time? The Uneducated Economist. Extra low, extra long for an extended period of time, and then extra high, extra long for an extended period of time. Very much like what Kashkari is saying down in the article. How could it be anything else? How it is that I was able to call this stuff out 2 years ago saying this is the situation we were going to be facing. I couldn't detail it. I couldn't tell you exactly all the, little pieces of detailed information like the tariffs and all that other stuff. All I was saying is that there is going to be an environment in which that the Federal Reserve would keep their interest rates extra high for extra long, getting high and staying high. That video came out over 2 years ago. All right? So to understand how it is that you need to conduct yourself, you really truly need to understand what it is that the Federal Reserve is trying to do. Most people are so focused in on tariffs and the implementation of tariffs and what that is going to do to the economy that they are totally missing what it is that the Federal Reserve is looking for out of their monetary policy. I set all that other tariff stuff aside and I look over at the monetary policy and I'm like, dang guys, you are getting what you are asking for. Right? I'm just an observer. I mean, I don't have it like, up, down, or sideways doesn't really make any difference to me. I'm not terribly invested in the stock market. I really don't have business, that I'm in charge of. I work at a day job. I have side hustles. I have so many different things going on in my life. Any one thing doesn't really impact me in a major way. Even if I was to have something dramatic hit me, I have conditioned my life to absorb impacts of such nature. Whether or not that I am successful at it, that time will tell, right? But the fact is that I have conditioned myself to deal with the fact that I understand that the Federal Reserve was going to keep interest rates extra high, extra long for an extended period of time. And I don't really care how much Trump cries about that. I don't care how much he is going to threaten Jerome Powell and the Federal Reserve and all the other stuff. I don't like all that stuff is noise. What I was looking at is what the Federal Reserve was asking, not even asking, saying that they were going to do with their monetary policy years ago, and then I see it taking place today. That's what I am looking at. Now, whether or not that it would happen by accident or coincidental or all that other stuff, I kind of laugh at those things. Say, hey, well, if it was a coincidence, they got what they wanted. Very much like it was a coincidence with COVID, and it was a coincidence with these tariffs, and it was a coincidence with everything else that happened out there that totally saved the Fed's monetary policy. A lot of people don't realize that prior to COVID, the Fed was done. They were out of the game. They had no monetary policy adjustments from the Fed funds rate. It just wasn't going to work. They were at 2.5% on the Fed funds. They drop it down to 0. No stimulating effect from it. And no way was that going to be the way that they were going to get the economy juiced up and moving again. They weren't going to be able to do it with that. There was a time when they used to. Adjustment of interest rates was a very common form of monetary policy. In fact, it was the monetary policy. Adjustment of interest rates was all that the Fed had. And they didn't even communicate about it. It wasn't all that they had, but it was the main policy tool that they had, and they didn't communicate it about. They did not communicate about it. They hit people with the shock and awe. So back in the 80s, if the Federal Reserve made an adjustment on their Fed funds rate, you just woke up one day and it had occurred. And you're like, whoa, what's going on? How do I deal with this? Now, they use communication. And they're so good at the communication, like literally they came up with all kinds of ways to be able to communicate to the people. And knowing that they were not going to be able to communicate to people who weren't paying attention. They knew this. They knew that they could put out inflation expectation, theory, thought, threats, all kinds of stuff. And there was going to be groups of people who had no clue about it taking place because they were not paying attention to it. So they developed ways of using social media, Twitter, music videos, all kinds of, like even the social media content creators themselves. Mike Martins and I were talking about this last night. They were using it, paying them to put out particular information, to interview particular people so that they could put that thought out there into the people. This is how the central bankers were communicating their monetary policy and how to best get the most power out of it, and by learning how it is that they could get this information to people who normally wouldn't watch it. Like those who are paying attention to like talk shit, like The View or something like that. Like most people are not focused in on monetary policy. In fact, here, this is something that they found. They could give people some information that would give them an elevated inflation expectation. That would only last 3 months. By 6 months, it was gone. They cannot remember it. If it was a one-time like information delivery, right? The people would, even if they were paying attention, would only hold on to it for a few months, and by 6 months it would be gone. They had to constantly reiterate it over and over and over and over again to make sure that people knew. How it is that people would come to me and go like, oh my God, the price of eggs, it's killing me. And I'm like, eggs? I mean, how many eggs do you eat a month? Like, how could it possibly be that your life is deteriorating because egg prices are elevated? Right? That doesn't make any sense at all, unless it's constantly being hit to them on the mainstream media through the delivery of information, propagandized information. Now all of a sudden it has this weird feeling inside of them, oh, the eggs are deteriorating my life, the whole world is coming undone because the eggs are so expensive. Oh, really? I mean, come on, guys. That's information to create an elevated inflation expectation. It totally works. It totally works. You know how many people came down to start building chicken coops? I'm thinking, you know how many eggs you have to get in order to make up for the fact that you just spent $1,000 building a chicken coop? And most people don't realize that the feed to egg ratio is almost a break even. Right? Like, you put as much feed or as much money in feed to feed the chickens than you get out in eggs. Right? Of course, when eggs are at $12 a dozen, that might be a little different, but typically when eggs are at a normal price, which they will go back to a normal price, especially if everybody starts to raise their own eggs, right? It's just like none of that stuff made sense to me, but then I realized, it's propagandized information delivered with an impact that is meaningful and it hurts, and people feel the pain from it and they keep getting it over and over and over again, and then pretty soon it's deteriorating their entire life, the price of eggs. You see it, you can see it. All right, 21 minutes into this. Let's go ahead and read some of these comments here before we have to cut the video. Thank you, everybody, for being here. 243 people watching with 48 likes. Thank you so much for hitting that like button. All right, are lumber prices important? Well, lumber prices are obviously important. I mean, there's like that wouldn't... Like, I mean, you think about it, it's just like the cost of building a home. Lumber's a major impacting price, a very important cost input going into that house. So yes, lumber prices are very, very important. But I think it's more important to understand why it is that lumber prices are moving up. Now, if lumber prices are moving up because of the supply and demand issue, that makes sense. But if you have prices moving up because of the credible threat of tariffs, that's a speculation. That isn't going to last. That is going to find an equilibrium when people finally realize that the tariffs are not as impactful as they had speculated them to be, right? Because really what it comes down to is a supply-demand issue. Either you have the supply or you have the demand, you have the equilibrium to the both, right? If demand increases and supply is low, prices move up. If supply is high and demand is low, prices fall. There's really no other way of trying to look at that. Now, you can create a situation that says, oh my gosh, all this lumber coming from Canada is going to be super expensive because it has this 25% tariff that's going to be added to it. Okay, let's do the same thing like we did back, with everything else. Let's look back in history and see the examples of what happened when there was a high tariff put on lumber. Nobody notices. Nobody notices it when it happens in the past. The only reason why they're worried about it now is because of the credible threat of it. It hasn't happened yet. But yet everybody has their beliefs, their understanding. They're starting to change the way they conduct business, the way they do their bids. Everything is starting to change on the way it is that they conduct themselves, but yet nothing has happened yet. And even if it did happen, how impactful will it really be? Considering that we had tariffs in the past that nobody cared about. So all of a sudden now we care about it. Why? Because the damn news is hitting you with a belief and a feeling that comes with it that says this is going to destroy my life. And it works. It totally works. I mean, I see it every day, just with my customers. I work at a retail lumber yard. I can see it. People come in all the time. How much is a 2x4? I tell them, they're like, wow, that's really expensive. And I'm like, it is? And they well, yeah. And I'm like, no, it's not. Like, I've been selling 2x4s for a very long time. The price that I'm selling a 2x4 8 standing and better right now is the same price I was selling it for back in 2018. Like 7 years ago. There's like that idea that there's all of a sudden this lumber is really expensive. I don't know where they get that information, except that it's propagandized information coming from the mainstream media, talking about how the tariffs are going to cost $10,000 added cost to build a home. And I'm like, it's, okay, I mean, that's your speculation, that's a guess, and really, ultimately, you could probably adjust the cost of the input cost going into a home by $10,000 just by switching the cabinets and flooring around. Like, it's all propaganda, every bit of it. And so I don't even stress about it. Like, me personally, I don't even think about Canadian tariffs. Like the 25% tariff on Canadian lumber. That doesn't make, like, to me, like, that is such a low concern of mine. Like, I don't even, like literally, it's like almost non-existent. We consume, when it comes to the framing lumber, right, this is something else that I think a lot of people misunderstand. There is a lot of forestry products that come into the United States, right? A lot of it. The framing lumber portion of that, right, which is the material that you would use to construct a house, right? The framing material. We get 20 to 25%, maybe even close to 30% at times, 20 to 30% of the softwoods that we consume here in the United States comes from Canada. Now you think about that, all these forestry products that are out there, the framing lumber portion of it, right, is included inside of that. So now we think about it, when you have 80% of what we consume here in the United States domestically supplied, right? Does a 25% tariff on 20% of the lumber really going to impact our lives that much? Yeah, a little bit, right? It's going to cause some distribution issues, and you're going to find that people are going to then elevate their expectations of it and then create an environment in which those lumber prices are higher. But there's really no reason for any of that when we can supply a majority of what it is that we can consume. Considering demand is low and production has fallen, we have a lot of room to increase production. You can add more shifts, you can add second lines, right? There's a lot of room to increase production when you have been in mill curtailments for as long as we have. And so when I read articles about how Trump is going to open up the forest industries to allow more land to be cut more trees down, and I'm like, that's not the issue. That's not an issue. This river right here, I live right next to the Columbia River. There's freighters out there that haul raw logs off of this river out to China. Raw logs. China just put a ban on logs. Do you know how many forest industry issues that are now rising? I'm reading articles about how hardwood suppliers that had their main export or had their main product going exporting out to China are now suffering in failure, right? I mean, I thought we were supposed to bring production back to the United States. We were going to open up lands, and now here I'm reading articles about how these particular suppliers of hardwood are going to go out of business because they do not have their customer over in China any longer. Okay? I'm sorry, are we supposed to increase production here or not? Okay? Because that doesn't seem to be increasing, that seems to be failing. We have loggers here who depend on that Chinese market. They need to cut down trees and send them to China. That's how they make their money. We don't consume all the trees we cut. We have a vast forestry industry here in the United States. We can produce all the lumber we need, buying it from Canada because Canada has a vast amounts of it as well. They help supply the industry. They keep the flow of material going. It's all part of the game. But to understand that if we lose a major buyer of our agricultural product of forest industries, China putting a ban on logs, that can damage our forest industry in such a way that cutting down more trees doesn't help but hurts. It actually does the opposite. Wow, look at all these comments. You guys are really going off. Okay, let's get down here a little ways. Does the guy even sell logs for real? Are you talking about me? I don't sell logs. No, I sell lumber. Right? There's a difference. The timber industry and the lumber industry, separate. Totally separate industries. They are not the same thing. I love the smell of fresh cut trees. I do too, Walrus. Actually, that's a great comment. I do too. All right. Apocalypse Now is no longer a movie you watch in a theater, it's reality. Simon, I don't know how many times I've said it before, but I'll say it again. You're a genius. Well, thank you, Brody. I appreciate it. I just, I don't think of myself as being some kind of genius or anything on that. Right? I really don't. I consider myself an average guy just like everybody else. I think the difference inside of it is that I wasn't educated. I think the name Uneducated Economist is very suiting, right, for this situation, considering that I never once had a indoctrination into the economics, into the political arena. I never had that. I never had a professor, I never had a class, I never had a mentor, I never had any of that stuff. Right? Actually, that's not true. I did have a few mentors at times, right? People I would ask questions to and stuff like that. But it wasn't that much, and it wasn't for very long. Right? Everything that I know about economics literally came from asking questions. What is fractional reserve banking? What's a mortgage-backed security? What's a credit default swap? What is? Right? And so I would start trying to research and break this stuff down, and it would be so confusing. It would be so confusing. I would be reading something like a Fed speech or a Fed document, and I would have no clue about anything that they were talking about. I would have to take this sentence and read it over and over again to try and internalize what it was. Go and look at the notes, the footnotes that they would have. Go and read those speeches, those papers, not have any clue about what they're talking about, and just keep doing it over and over again and reading it over and over again until I started picking up what it was that they were talking about. And then pretty soon I realized that I could start reading these speeches without having to go and research what it was that they were talking about. I was grasping, I could get it. I was understanding what it was that they were trying to communicate. And the more that I was reading through this stuff and I was watching the news, and I'm thinking, they're not talking the same thing. They're not talking the same thing. The things that they say on the news is not the same thing that they say to each other. And so as I started to break down this, because they also talk in code, right? Like if you're not already aware of how it is that they use these words and the meanings behind them, or at least their meaning behind it that they were trying to use, it's almost as if they are talking in a way of like almost like another language, right? Once you understand that and you understand the language that they are using, then it all of a sudden it becomes very clear that they are communicating in two ways. One to the general public, the delivery of information, and then the other one is their strategy that they share with the other central bankers out there. And I don't know why it is that nobody else seems to see the separation, but I can see it clearly. Like I can clearly see the separation. It's just like it's obvious to me when I go to the mainstream media and I look at some of these things that they are saying, and I'm like, that's not right. Like that's not right. You know, what you guys are trying to lead the people to believe. It's gaslighting. It's at its finest. It's in a massive scale too. It's just like you can understand gaslighting in a relationship, like somebody allowing their wife or something to believe something about them that isn't true and then they don't correct it or something like that. That's kind of like a gaslighting situation. This is like the whole world. Right? Think about how many people are convinced that the Fed is trying to get that 2% inflation target. It's not accurate. It's not right. Nothing could be further from the truth on that, but yet nobody really knows that. All right, the Fed talks in legalese because finance and monetary policy are litigious subjects. Yep. All right, do you think the end result is the Fed taking interest rates negative? If that's the case, then what happens to the neutral interest rate? Do I think the end result is them going into negative interest rates? Like, is that their goal, or is that I think at some point negative interest rates will come about, but there's going to be a lot that has to happen within the economy in order for that to take place. One of them, we have to be in a cashless society. So without a cashless society, I just don't think negative interest rates would really be an effective, I just don't think you would be able to do it, because most people would end up pulling all their money out in cash. So as long as you have cash in the system, negative interest rates is going to be very difficult. So no, I don't think negative interest rates is like the goal. I don't think that's like their idea of what they want to do. Yeah. So the more I look at what it is the Federal Reserve is attempting to do, if you give it the meaning that they are trying to create a situation in which the rich get richer and the poor get poorer, you can find that. Like there's total evidence. Like that's you can give it that meaning and then prove it. You can give it that meaning and prove it. However, to me that's more the symptom of what's happening. Right? To understand what's really taken place is to understand that the Federal Reserve has now moved into a position in which we have debt-based currency with ever increasing amounts of demand for the liability, the dollars. So the more that people create debts that are due in dollars, the more demand for dollars are needed, the more the Federal Reserve has to provide the world with those dollars, provide the world with the liability. That right there is so hard to wrap your head around for most people to try and like really understand the level that this goes to, because it's like you're talking Eurodollar stuff. You're talking people who are writing contracts outside of the United States. We don't even know to what level that really is, right? We don't, like, if you and I write a contract that are due in dollars, who's to know about that except for you and me, right? But when that contract comes due, it's still a demand for dollars. And that contract can get used like dollars. So think about how many dollars exist outside the world or outside the United States that exist in the world, and that Federal Reserve has to create the liabilities to provide to the world so that they can meet that debt obligation. That's hard. That is a crazy scenario. Like there's no winning at that. There's only one way to go, and at some point it will fail. How far out into the future is very difficult to understand. Most people, like if you would have asked me, 10 years ago, 15 years ago, how much longer the dollar has, I would have said it would have been over by now. But knowing that it's not over and that it doesn't appear like all the things that I thought would have caused a dollar demise has come and gone. So I'm like, okay, well, I'm not going to think that way any longer because obviously I was wrong in that thinking and believing that. What I'm going to look at is going to be something much different. It's going to be how is it that the Federal Reserve is going to continue to operate, because that's what they are going to do. All right. Now, at some point, it will fail, and you can think that's going to happen tomorrow, and a lot of people do, but I don't. Right? I don't see it happening tomorrow because all I see is more people taking out ever-increasing amounts of debt and the demand for dollars increasing outside of the United States. That's what I see happening. So, again, we can try and say, hey, what about this hypothetical situation or this possibility or this what if? Like I did a what if video yesterday talking about the bond defaults. Totally said it at the very beginning of the video. This is a hypothetical. It's not real. It's nothing, everything here from this point on is just a what if situation. And you wouldn't believe on how many people got into like this, dude, you're so wrong. This is not, and I'm like, how could you possibly be wrong on a hypothetical? Like you can't, right? There's no way you can be wrong. You can make up anything you want after that. And that's why I don't like doing those videos, is because that's exactly what it is. People look at that and they say, oh, dude, you're so wrong. How are they going to possibly do this, and this? And I'm thinking it's a hypothetical situation anyway, right? So we can throw any what ifs you want into the whole scenario and change the way that you think about it. None of that stuff is based in reality. Right? The reality of the situation is this, what we are facing today. That's it, right? What could come in the future is not here. There's no guarantee of it. And what has happened in the past is no guarantee of what is going to take place in the future. So it's best to understand it for what it really is, and understanding that the Federal Reserve is in a position in which that they had run out of monetary policy and that they need to start using their words more than their actions in order to conduct themselves. Here it is. This is what it looks like. Yeah. What time is it? I think I got to go. I got 5 more minutes here. I know it's probably far into the future, but once the world doesn't need dollars, what's their strategy then? Well, M Rider 777, again, that's a very hypothetical situation to think about. Like, how far into the future do you think that's going to be? Do you think that maybe before the dollar has completely collapsed, that maybe there will be a transition into like digital currencies? Right? There is a way of removing cash out of the system using stable coins as the main form of currency, and the Federal Reserve continue to issue liabilities like they normally would, conducting monetary policy like they normally would, but now we have a digital component because they are using stable coins instead of creating a digital currency. Nobody knows what's going to happen. To me, that's kind of like seems to be the path that we're headed down, but I can't guarantee that's what's going to happen. I don't know, right? Right now, I got folding dollars in my pocket. As long as I have cash in my pocket, I'm not thinking about negative interest rates. I'm not thinking of a failure of a dollar, because I can take that dollar and I can go to any one of these people around me and say, hey man, do you want one of these? And every one of them will say yes. There's not a single person out there who would say no. Not one person that I could find out there that says, hey, you got something for sale, I got $1, you want to accept it? And they tell me no. I've never heard of such a thing. All right? And that's what's important to understand, is that so long as you and me and that person over there are going to accept those dollars, there's very little chance of the failure. Now, I also got a silver coin. I don't have it with me, but normally I have a silver coin with me. I could take that silver coin to 100 stores here in Astoria, and I doubt that I could find anybody to accept it. Not for spot price, not for under spot price. Like, I doubt I could find anybody to accept it. Right? I might find somebody who might buy it off of me. And in that sense, okay, yeah, maybe you can say, all right, you traded that for food or whatever. But ultimately, if I had $1, no problem. Silver, not so good. Bitcoin, probably not a chance. Right? Just look at the reality of it. I mean, I know, you know, dollars are worthless, but yet it seems to be the most accepted thing. The worthless piece of paper is by far the most accepted thing to do transactions with. You know why? Because it's currency. It's not money. It's meant to trade goods and services for other goods and services, and it works. It completely works. Nothing else does as good a job as dollars do. I don't like it. It's just the case, right? It's just the fact. All right, I would gladly pay you Tuesday for a hamburger today. Absolutely, Greg. The world chased dollars. All right. My meth dealer's now selling eggs. Okay, when I buy a load of logs, I call the sawmill down the road. He diverts a load to my farm. I pay the driver. Oh, hey, right on. Thank you, Tom, for the $5. Let's go take a look at that. 4 trillion was printed during the pandemic. Does money ever leave the system or just change hands and stay in economy always? Well, you have to think, like, 4 trillion wasn't necessarily printed. 4 trillion was created as reserves and digital components on a computer. So, does it ever leave the economy? Well, does it leave the world? No, right? I mean, it stays in the world. So there is dollars outside of the United States that are creating economic conditions outside of the United States. Then we also have the United States with its own economy, right? So when you think like all the printing of this money, does it affect the United States and the world? Absolutely, right? That's why they have two kind of conditions that they are facing. One, to meet the world's demand for liabilities, right? The dollars out there just to meet all the debt obligations out there. And then they also have the local economy to deal with, the domestic, United States economy. It's a very hard road to walk, right? Like, how do you maintain, and like if all you had to do was just worry about the United States, that would be differently than also meeting the demand for liabilities from the debt obligations that exist outside of the United States. Okay. So no, it doesn't it doesn't leave the world. You have to think like, man, all this demand for liabilities, how do they meet that demand? Because if they don't, then what happens is the dollar strengthens. Then debts can't get paid. Now you have debt defaults, and you have, bankruptcies, you have slowdown in the economy, you have like United States exports go to hell because nobody can afford to buy anything from us. That's from the dollar strengthening. People think to themselves, no, dollar strengthening is a good thing. Yeah, if you're a saver, right? If you're not in debt, like that dollar strengthening is a wonderful thing, right? As long as you can maintain your income, and as long as, you don't have some debt obligation to pay, the strengthening dollar is a wonderful thing for those people, but most of the people are suffering deep in debt. Most people rely on business activity in order to make the money to survive for that month. If you have a strengthening dollar, less business activity, more slowdown in commerce, then you're going to have failure of businesses out there because the dollar is strengthening. All right? I mean, take it however you want. Like, to me personally, going strengthening dollar or weakening dollar, I'm down for both. Like, I can go either way with that. Me personally, because I kind of understand what's happening and I've kind of positioned myself to deal with either way. Most people have only one direction that it can go. It has to get weaker, or else they cannot meet their debt obligations, and failure and bankruptcies and chaos starts to come from that. Right? If they make it too weak, right, then we have the weakening economy, inflationary pressures. People are again start slowing down. So as far as their business activities, it's a difficult road to walk. And I don't envy it. I just kind of sit around going, oh, what are you guys going to do next, man? This is like, because whatever you do, I'm going to have to, adjust what it is that I'm doing in order to deal with the fact that you guys are doing whatever it is that they're doing, The total debt was approximately 65.6 times the value of annual export goods and services. XRP cult is everywhere. Yeah. Most Americans will hurt when the dollar falls. Yes, inflation. I don't know. I think more people get hurt during recessions than they do through recessions and deflationary episodes. I think is more painful for the people than inflationary ones. I know people would probably disagree with that, but I just look out there at the economy and I look at some of the conditions that we are facing and the things that we had faced during the great financial crisis, and I'm thinking, yeah, more people were suffering and crying and hating the economy during the great financial crisis than they were during COVID. Like, at least with COVID, you had a job, right? Like, great financial crisis, there was no jobs, right? Great COVID, there was more jobs than you could find. Like, there was help wanted signs everywhere. Nobody wanted to work the service industries and stuff like that. It's a very different situation. All right. You can have stagflation. Cruise down here. Only if you pay the tax to realize those gains. Give examples, please. Deflation is worse for earners, but better for the vultures. Yeah. Like, if you got a cash hoard and you're ready to, jump on buying opportunities, recessions and depressions, oh yeah. That's like your day. That's like your moment. And you're like, yeah, But most people are not in that position. I position for a stronger dollar. I feel so wrong to root for a stronger dollar, but that's my position that I want to happen. Well, I mean, I think I understand, like, I want gold and silver to be worth an insane amount of money, right? That's what I want. Do I expect it? Not really, especially not in silver with the paper manipulation game and all that. Like, what I want out of it is not necessarily what I'm going to get. So I don't position myself for what I want, right? Like, in life, I try to position myself for what I want. Like, I try to, for the things that I want. But what I want out of the economy may not be what you want, right? Like, what I think is the right thing, you might not think is the right thing. And so I don't look at or position myself for what I necessarily want. I position for more what I think is going to take place. Okay? And what I think is going to take place is elevated interest rates for an extended period of time to make up for the fact that they failed to achieve the 2% target, and they're trying to get the neutral interest rate higher. Now, if the economic environment is creating that sort of situation, then that's what I think is probably going to continue. Right? Just like what we have going on here. I'm not worried about it. Like, people are worried, oh no, lumber is going to go up to, new all-time highs or something like that because of this 25% tariff. And I'm like, I'm less concerned about that. They're getting the neutral interest rate higher, elevated inflation expectations, all the other stuff that's going along with it. I don't see it. Not concerned, right? That's the difference in the way that I kind of look at things, right? Which is different from what most people are thinking. Oh gosh, they're forced. They don't know what they're doing. They're screwing up. Whatever. They have like all these things that they talk about, how politics, the Federal Reserve just wants to destroy Jerome Powell just wants to destroy Trump or something. Like, they got all these things that they put out there. And I'm like, none of that stuff makes sense to what they're looking for. Like, none of that stuff makes sense. You can say it. I mean, it kind of makes sense when you start piecing it together and you think about all these facts that are coming up and you give it some perspective, from like a, I don't know how you try to, Trump knows what he's doing when it comes to like these tariffs and trying to prevent like fentanyl from coming into the country and stuff like that. Like, that stuff I believe is real. Like, I think that's what he's like. I think that's like a real thing that is happening. But I don't think that's like, I think that's lesser in more of a symptom of the bigger issue that is happening out there, which is the monetary policy. If it doesn't work, if it fails, then the whole system, everything, it doesn't matter, tariffs or anything, it's all over. The monetary policy is absolutely critical. It has to function. It has to continue on. There can't be any screw up inside of that. And so knowing that the Federal Reserve was looking for a particular condition, and if I could call it out 2 years ago saying, hey, they are looking to have interest rates elevated to try and get the neutral interest rate higher with an elevated inflation expectation, and you see it occurring today, then I don't know why we have to reinvent the wheel. Like, to me, it was just like, yeah, what really gets me is when people say, well, yeah, you might be right, but you're right for the wrong reasons. And it'll be like, oh, good Lord. All right, whatever. Give it any meaning you want, right? Either I'm right or I'm wrong, and that's all there is to it. You can't say, well, you're right for the wrong reasons. That doesn't make any sense. All right, strong dollar, stronger in relation to what? Did you see Euro USD price action recently? I'm not talking about the short term. I'm talking about the long term, right? I'm talking about decades worth of strength. And you think about it, the dollar index is higher now than it has been for a very long time. All right? Like, the dollar is stronger now to a basket of world currencies than it's been for a very long time. I mean, there was times when it was higher than it is today in the recent past, but over, considering that what has taken place since the great financial crisis era, I mean, we have a very strong dollar comparatively, even after all the money printing. And the reason why we have a strong dollar is because of the sheer amount of debt issuance that takes place outside of the United States that is due in dollars. That's a demand for dollars that strengthens the dollar, right? That's why nobody else is ever going to compete against the dollar, because nobody else is willing to create a situation within their economy that can do that can compare. You know how much U.S. Treasury debt would have to be replaced by the BRICS issuing out debt? Like, none of those BRICS nations want to be a debtor to the size of the United States. They all want to be producer savers. That's why they want a gold-backed currency. Like, if you're a producer saver, you don't want fiat currency. If you're a producer saver, you want gold currency, because you're going to produce stuff, sell it out there to the world, and the world is going to send you their gold. How awesome is that, right? That's why it's not going to work, because the moment that you get into a situation in which that you are offering up gold and you have dollars in the system at the same time, and you're willing to accept dollars and you're willing to accept gold, then everybody's going to hoard the gold and send you dollars. If you refuse the dollars and you only accept gold, you will deny the world the ability to do transactions because you will hoard all the gold. It's just not going to work. What we have right now is a system that is based off of debt issuance. The more debt that you issue, the more dollars there are in the system. The only way to issue out that debt is to have a demand for it. that exceeds that of what it is that your local economy is going to demand. Everybody around the world looks at U.S. Treasuries as a safe and liquid asset. There's nothing else that compares to that. You can say gold and Bitcoin are safe and liquid assets. You can say it all day long. I kind of agree. I own Bitcoin. I own gold. I have them as an insurance policy against a third-party claim. You can say they're safe and liquid assets. It doesn't matter how much you say it. The fact is that U.S. Treasuries are the safe and liquid asset. That's what's being used. Right? You can give up a hypothetical situation that says, well, what if, right? Doesn't matter. What if? What is what's important. Looks like USD exchange rates are dropping. My bet is that smart money is anticipating international coordinated trade action against the US. What time is it? I gotta go, guys. Uneducated Economist, you guys let me know.